Hello, everybody. I am back. Last week was Thanksgiving. I hope everybody had a nice Thanksgiving. I took some time off. And now I am back today. By the way, the new issue of MMT Trader is out. If you'd like to get a copy of that, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. Let's go over what has been happening, okay? But before I get into that, let me just say that the stock market correction is over. The market averages, that is the Dow, the S&P 500, and the NASDAQ are all back up on the year, although marginally. It has been a very emotional correction, driven by a lot of things, mainly policy, some of which was unforeseen, but those policies, I believe, have been interpreted as being far more negative than they really are, and we'll get into that. But before I talk about that, let's just do a rehash of my outlook, the outlook that goes back to December 2015. In fact, I was writing about this when I was contributing at the time to TheStreet.com, leading up to December 2015, where the Fed had announced its intention to raise interest rates, in other words, reverse monetary policy for the first time in 9 years, the rate hike, that is. I said the following at that time, that the rate hike would be bearish for the US dollar, it would be bullish for gold, it would be inflationary, and it would be positive for the US economy and the stock market, not negative. Let's go over the numbers. I've been over the numbers many, many times, but it always serves to repeat them. I think people learn through repetition, so let me go over it. By the way, we've had 8 rate hikes. Remember, and a 9th coming up in December, in the month that's coming up. So 8 rate hikes have already happened. We've gone from a 0 to 25 basis point Fed funds rate to a 2.25% Fed funds rate. And we're going to be at 2.5% by December. So let's go over the numbers. In December 2015, gold was at $1,043 an ounce. Today it is at $1,220 an ounce. The dollar yen was at 121. Today it's at 113 and change. The dollar index was at 98.60 something, I believe. Today, I didn't look, but it's like at 97, whatever, let's say 45.50. It's down, okay? 8 rate hikes. The U.S. economy, which was growing at the time at under 2% or around 2%, grew in the third quarter at 4.2%, and the fourth quarter is forecast to be growing at about 2.5%. The S&P 500 was at 2,000, I believe. It might have even been under 2,000. The S&P 500 today is at 2670 something. Okay, by the way, up on the year, marginally, but it is up on the year. The Dow, I don't recall where the Dow is, but I just gave you where the S&P is, and I don't recall where the NASDAQ was at that time, but we are far higher on the NASDAQ. So what did I leave out? The euro, December 2015 was around 107 euro dollar. Today it is at 113. Okay, and the list goes on and on. Here's another one. The dollar Canada was at 138. Today it's at 133. So all of the things that I meant, treasuries, right, bonds. So we were at a, probably like a 230 on the 10-year interest rate yield. We are now at 306, and we're recently as high as 325. And by the way, remember, break the line, right? I told you about that. Nobody thought rates would ever go higher than 3% on the 10-year. I said that's a done deal. The Fed is going to keep on raising rates. So everything I said in my big macro theme, and it hasn't even been 3 years. It's been close to 3 years, but not. And if you're trading in a macro, big, long-term fashion like this to capture these big trends. And as I've said many times in the past, if these are policy-driven things, they last for years. We just had an election, a midterm election. That comes every 2 years. Policy doesn't change from day to day or week to week or month to month. It takes years. So you stay in that position as that policy is in effect. So all of these things, 100% accurate. There has been nothing, absolutely nothing contrary to what I have said. Now, this year, we had some counter trend corrections in such things as the dollar. The dollar index went from 103.82 in 2017 down to 88.25 early this year, and then it bounced up to where it is now, 97 and change, right? Sorry. So that is a counter trend correction. The the index ultimately will head down. That is a fact. So everything is according to as I said it would be. Inflation, you could see the pickup in inflation. No problem on that. The CPI was negative in December 2015. And the CPI is, 2.5, 2.6 year over year now. It was negative. So all of those things have happened. All of them have happened exactly as I have forecast them. Now, if I'm in a position long-term based on policy, macroeconomics, or the macroeconomics that develop as a result of certain policy, I stay there until the policy changes. However long that's going to be. Why should I get out? Now, in the interim, riding those trends, you're going to have counter trend movements. Now, basically, all of these things that I predicted, and every single one of them is true. There is not one position. There is not one forecast. And I went down the list. There is not one position. There is not one forecast. There was not one economic development that I predicted which has not come true. The inflation is up. The economic growth is up. The stock market is up. Gold is up. The dollar is down. Bonds are down. Bond yields are up. All those things were in my forecast based on the reversal in monetary policy and also based on the fiscal policy, which I saw emerging not just at the time, but has been ongoing. So everything has been correct. Everything has been correct. And you could argue that, oh, the last 7 months, you're all wrong, Mike. Mike, you're all wrong because the last 7 months. You got to go look from the beginning of the initiation of those positions based on the initiation, the implementation of those policies or that policy. Everything has been correct. Yes, there has been some counter trend moves, but that happens, folks. Nothing is linear, goes straight in one direction. Come on. Look at any major you want to look at a long-term trend? Look at the long-term trend in the U.S. dollar since we went off the gold standard in 1971. It's been going down, but in that time, or even look at the decline in interest rates since the peak in 1980-81, when rates hit 20%, 21%. Rates trended down until recently, but there were intermittent periods where they popped back up and they went back down and they popped back up and they went back down. But overall, that trend was down. So there you have it. Everything has been 100% correct. You could come on here, you could write ridiculous comments about how it's been wrong. It hasn't been wrong. All the forecasts have been 100% correct. This is MMT. Now, I've said many, many times, I am the only one out there who has an applied approach to MMT. Look, if you get blown out because you're riding a macro trend and you get caught up in some counter trend move or where zombies or people are reacting on some false belief or flawed understanding of the economics, then that's a problem you have to fix. You have overextended yourself. You have no mental game. You are looking for instant gratification. You have no patience. As Warren Buffett said, the market is a mechanism for transferring wealth from the impatient to the patient. Warren Buffett's worth $80 billion. He's also about 87 years old. Took him a long time to accumulate that wealth. I'm sure he's not dissatisfied that he had to wait his whole life for that. But many of you, you want the 80 billion like next week. You want every trade at the moment you put it on to go exactly as you plan. He even said, I don't even get into a stock position without the expectation that it's going to go down 50%. He said it. So let me finish off with this, just as I'll add on to the current forecast. Right now, there's a lot of emotion, a lot of fear. Everything you read is doom and gloom. We're going to have another crash. It's going to be a credit crisis. We're going into a recession. We are not, I'll state it right now, we are not going to go into a recession. As a matter of fact, when you strip away all the emotion and the crazy headlines and the fear-mongering and the doom and gloom, things look pretty damn good. Fiscal support is blowing through the roof. Bank credit is expanding. Loans and leases are going up. You just had a big pullback in oil prices. That's going to help consumers at a time when maybe rates are pinching them a little bit. You get a little relief at the gas pump. So, no recession. This was a correction in the stock market. It's going to head back up. 2019 is going to be a fantastic year. All that stuff's going to happen. So we gotta be truthful about what is happening here. You got to start from the beginning. What the outlook was, what my outlook was, what transpired, what it is now, all correct, 100%. There is not one thing, not one single thing that was against my call. Everything panned out. So, let's be honest. Let's always be honest. Bye, everyone.